All right, everybody, let's review the trading day, what happened, why it happened, etc. All right, so right now there's some weakness in various markets. I mean, take a look at this: ES, NQ, BTC, gold. This is short-term weakness, except for euro. But basically, markets are down. This is red, 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 red. So, and we had demand in the euro, we had supply in the ES, NQ, Bitcoin, some demand in copper, and supply in gold. And we're going to take a look at these signals because they happen all the time, every day. The question is how far it goes. So, the ES in the morning, it had a demand. And then it had a little pullback, went a little bit higher, and then it just sold off. So, it went up and then turned around 10:09. Supply came in, it tested, and then fell. So we had demand and supply signal. This didn't really seem too strong, but it did qualify as a demand because it was sustained buying. Sustained buying with movement going in one direction, someone's buying, and then after that you have sustained selling for 48 minutes. All right, then let's move. The same thing happened. Selling also was very clear in the NQ, so both of them confirmed. After that, you had crude. Crude popped up, and then selling came in. Had a pullback after 9:03. Selling, you had a pullback and went down, after which, out of nowhere, demand came. Nat gas, this was the only unreliable, clearly unreliable, meaning demand came in, but it couldn't rally on the pullback. I mean, there was a pullback here, 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 but it just couldn't rally. Everything else was pretty straightforward, meaning you had demand, went up, supply came back and tested, went down, supply tested, went down. I mean tested, I mean pull back. So supply, pulled back, went down, then demand. Demand, this is the only one that didn't really have follow through to the upside after demand. And after that, you had gold. Gold, you had demand, had a pullback, PB, and then went up. So you have your demand, and it's sustained buying. Sustained buying is the key. Because sustained buying is not a pop and drop. It needs to be green, 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 all that, and buying with weak pullbacks to test, and it goes up. Same thing with copper. Goes a little bit down, sustained buying with a lot of green candles. Pulls back, tests, and moves up. Now, you don't really know how far it's going to go unless there's levels up there like Friday highs, Friday lows, POCs, overnight highs, overnight lows, stops, etc. Right? So you have demand come in, pulls back with the PB, and goes up, takes out the high, and then you have supply come in. Same with copper. Just demand, pull back, and goes. And the same thing with the euro. You had demand come in, pull back, and then moves up. Yeah, they almost look the same. Right? They look very similar. This one here, BTC, went up, pull back, but failed, and there was supply. Right? So we have the various demand and supply signals indicating what goes up, why it goes up, and all of that. And the important thing is, like, before you even touch a market, you need to see its qualities. Just watch this. So in the ES is active, So the high hit rates, NQ is active. Gold on the long side obviously is active. You don't want to short it, right? And crude on the long side, a little bit euro. But when markets are not active, like right now, Bitcoin is a little weird. So it's not going to work because you need active markets. Why? Because the activity means that there are participants, strong hands that are there that create trend. As long as you have activity, meaning range and volume, it's going to move. You need the volume means that there are big players involved and they're there to make money, right? So let's see. The ES is doing pretty damn good. You see that the ES, you had 29 days, out of 29 days, 20 days gave good signals. So it's about 69, about 2/3, 66 or 69%. And the average pullback, surprisingly, is halfway back. All right. From those, you have supply and demand signals, and 9 out of the 20, which is 45% are demand, and the majority, meaning 13, are supply. Obviously, the market's going down, so you're going to have more supply signals than demand. The win rate's very high. Pullbacks are around 44 to 54%, so they average around 50%. But the long extension you have to be careful with because the target is very little, 1.35, whereas we see the supply target is easily double, right? So this is not good. So just be wary because the market's going down, that the longs, even when they work, they don't go far, but supply does. And the risk reward is 1.6. Here is 3.5. So the risk reward obviously is more skewed to the selling. And then this is like the evidence, all the charts that show you that it's working. You don't want, I don't want to just rely on stats because stats have a lot of rules and exceptions to the rules and stuff like that. So it's very important to see what this means. All right. Anyway, so as far as the range, Mondays, except middle of the week, the rest of the days are pretty good. Obviously, Mondays are usually pretty good, but not today. And Mondays usually have a bullish bias. Probably why I didn't break that hard today. Other than that, Thursday is showing a bias where you had bullish. March 19 was bullish, but the rest of the days, majority of them, are bearish. And this is near term. I don't want to see, tons of data because I'm interested in the leading indicator, and that means near term data. Anyway, so now let's go over this. So what happened first? We had the high of day, which was established around 10:03 or 10:09, like right here. That happened first. That took 1 hour and 33 minutes. 1 hour 33 minutes, and went back to open in about 48 minutes, ending the wick at around 10:51 a.m. And markdown ensued only for 36 minutes. So it didn't have that much movement. My average markdown is like 4 hours. All right, which means that there's going to be expansion either tomorrow or day after. When you have low range, then it's followed up by a big range day. The rally, which is this right here, the supply rally, lasted for 48 minutes and was done at around 10:57, pulled back at around 11:12 a.m. Usually the pullback is around 10:20, around there, and the supply or demand is done by 9:30. So this is very important information right here. And it only had one pullback. It was a shitty pullback, which only retraced 26%, and that's because they trapped people making a lower low. All right, and that's only because you look below, pull back, and then break. So this was like a look below, and it pulled back to around the 50% mark, which is what I was expecting, because that's where the breakdown occurred. See the break of this and this. So that break, perfect test, like that area. So that's how I know that this is not valid, that it's going to come back and go test something around here with the, with high volume. And the risk is pretty heavy, because that's how you know not to take this trade, because too much risk and it didn't pull back enough. But if you go to the 50%, right, the risk is almost half as much, right? And the extension from here to here is very small, 1.28. All right. The reward is not good. It's 1,888, which means more risk than reward. So you don't take that here. You wait for this move. All right. 11:27 is when the target was hit, meaning that lower low. But really, this is really one big leg, and that's one big pullback. So you just have to know that. And the low of day was hit about 11:27 a.m. The high to low gap was about 1 hour and 24 minutes. Okay. Now, from this, what do we take? Well, first of all, when did the rallies occur and when did they end? So we're taking a look at 9:30 and around the pullback opportunities actually after 10. Sometimes it's before. It's usually before, but around 10ish. And that's after a retracement of about 54%, around 50% retracement. So in this time interval, you're going to see a big move and you're going to see a pullback opportunity. That opportunity is too short or long, depending on whether the supply rally or demand rally occurs. And then just a matter of watching the risks and all that, risk reward. In the last, this is even easier. In the last 10 days, you could see that the pullback entry opportunity occurs around 10 o'clock after market retraced more than 50%, around 61%, right? Some days it's more, some days it's less. And typically you have this much risk and this much reward. So what else do we notice? Very important to take a look at some correlated markets, because I'll give you an example. The market goes up, market goes up, market goes up, right? So 10:09 a.m. you have an up thrust or shortening of the thrust that is unconfirmed. As you can see, the INVIX does not confirm it. This makes a higher high, this makes a lower high. So there's your divergence, so something's wrong up here. Right? So that, now, it doesn't mean all the time, but the idea is if this is breakout potential, right? Because you're gonna be fooled by this bar, thinking it's a break. So that the next thing is how much follow through is there, and there's nothing, and that's why the INVIX didn't crack. All right. So highs and lows need to be confirmed, and they're not. So this is a clear case that something's not right. And then you get some confirmation in the form of a massive supply wave. See? The lack of ability to go high caused selling. So they kind of validate one another. If you can't go up and you have divergences, does that mean you take a short? No. You need to see more evidence, and the confirmation comes in the form of heavy selling, meaning there's bear divergence, heavy selling after confirms the bear divergence, and then looking to short the pullback. All right, I'm done. Have a good day. Thank you. Bye.